Hey, what's going on YouTube? And welcome back to Tech Conversations. I'm your host Guillermo. It is July 14th. Hope you're all having a great day today. Now, today I just sold my very first covered call on Webull. And I'll actually show you what my portfolio looks like. So unfortunately, I can't just navigate into my account because my account number is showing all over the place. So I have to take a screenshot, but here's what my portfolio looks like right now. I bought 100 shares of PaySafe today at 1074, and then I went ahead and sold a call against those shares. I also have 2 shares of Snap. Now, that's what I want to talk about in today's video is how to sell covered calls on Webull, and I will be making a lot more videos on how to do different trades on Webull in the future. So before I get into that, all I ask is that you guys hit the like button down below and subscribe, guys. It really helps out the channel. First of all, if you haven't signed up to Webull yet, go ahead and use the link in the description below to sign up. You'll receive 4 free stocks valued up to $1,400 after a $100 initial deposit. So again, go ahead and use the link in the description below to sign up. Now, it's important to have multiple brokers. So I use Robinhood. All of you know that. I'm also going to start using Webull a lot more. I also use Fidelity. And the reason you want to have multiple brokers is because number one, they all have different advantages. For example, on Webull has extended hours, meaning that you can go ahead and trade between the hours of 4 a.m., 9:30 a.m. Eastern time, and after hours trading between 4 p.m. and 8 p.m. Eastern time. That's something, for example, you can't do on Robinhood. The other reason you want to have multiple brokers is because, for example, let's say you get marked as a pattern day trader, and now you can't day trade for 90 days or whatever the restriction is. Well, since you have multiple brokers, you can go into a different broker and do a day trade there if you want. So again, it's important to have multiple brokers. So once you go over to Webull.com, you should see something like this. And then you can click on trade. This will take you to the application, which will look something like this right here. Now, on the left here, there's some different tabs here. You want to go over to the tab that has stocks. So as you can see, a tooltip shows up that says stocks. You can go ahead and click on this tab. So now that you're here, you'll see a couple of different things. So on the left here, you can see any watch list that you may have. In the middle here, of course, you'll see a chart of whatever the current stock you're on is. On the bottom here, there's a couple of different tabs here for different things that are kind of important to trading. And then over here on the right, you basically see some more information on the stock and a couple of different widgets that you can use and that are very beneficial. So the first thing I always do is I just collapse this watch list here. I don't really use it a lot, and it just kind of opens up a lot more space here for the chart, you know, if you like to do a lot of technical analysis, and of course this stuff down here. So here's what we're going to do. So again, we're talking about selling covered calls. Now remember, in order to sell a covered call, you do need to own 100 shares of a stock. So the very first thing is you want to find a stock that you want to sell covered calls on. So let's say my stock, the stock I want to sell covered calls on right now is Snap. So I can go up here and then I type in the ticker symbol. Here's Snap, so I click on Snap. So here is Snap, okay? Here's the chart for Snap, gives me the information, all that stuff. So again, we first need to own 100 shares of Snapchat. Now, if you're over here on the right, where all these widgets are, you can actually scroll down. There's actually a widget that allows you to do that very quickly. They literally have a button that allows you to buy 100 shares of this stock. So you would click on this. This is what I did actually this morning. I went to PaySafe. I found this widget. I clicked on buy 100 shares of this stock. Instantly purchased 100 shares from me. So very quick, very useful. Again, a lot of these widgets on the right are very useful. So that's how I went ahead and purchased 100 shares of the stock. So now that you have your 100 shares, you can definitely go ahead and go and sell a call option against those 100 shares. So what do we need to do now? So now, where are the options? Well, if you take a look down here, again, remember there's multiple different tabs up here. So we have news. So any news related to the stock, this is very useful. There's financials here as well, analysis, press releases, corporate actions. But as you can see here, there's also the options tab. This is where all the options will be. So So now that we're in the options, now that we've purchased 100 shares, we can go ahead and sell a call. So let's take a look at how we would do this. So first of all, there is this little settings thing right here that you can click, and you can change a couple of different things. For example, you can filter for sides here. So this will only show if I want the calls, only puts. Right now it's showing both calls and puts. If I only wanted to look at the calls, I can click on that and it's only going to show me call options here. But I'm just going to go back and leave it as calls and puts because this is the layout that I like. Now the next thing here, you want to choose the expiration date. So what expiration date do you want to choose to sell the call? So let's say we want to choose the July 23rd expiration date, which is 1 week from Friday. We would go ahead and the expiration dates are laid up here, as you can see. So we have July 16th is what's currently selected. If I want my expiration date to be July 23rd, I would go to July 23rd and click on that. This would show me the options expiring on July 23rd here. There's also a drop down here which has more options that obviously expire a lot further. For example, January 2023. So that's how you choose your expiration date. They're up here and you just click on it and that'll instantly update the options that expire on that date. So now we have our 100 shares. We're in the options tab. We've chosen our expiration date. Now, again, calls, as you can see, are on the left here. Puts are on the right. And since we're focusing on selling covered calls, we only want to focus on the calls which are on the left over here. So let's take a look. So the first thing I want to mention quickly is that this is only showing 10 different strikes, right? As you can see, there's only 10 different strikes. 1, 2, 3, 4, 5, and there's 5 up here. You can change that right here. Right in the middle, it says strikes 10. If you want to see, for example, 20, you can click on 20 here. This will show you more strikes. If you want to see less strikes, you can click on 6, and this will only show you 6 strikes. If you want to look at all of them, you can click on all here as well. I'll just go ahead and leave it as 10 for now. So anyways, a couple of different things to use there to your advantage there in case you get stuck and you don't see, further down strikes. So Snap right now is at $63.47. So remember, how does a covered call work? So the way a covered call works is you have 100 shares, you come in and you sell a call. And you choose a specific strike for the call you're selling. So for example, if I wanted to sell the call at the $64 strike, how does that work? Remember, what that means is that if on the expiration date, which we chose to be July 23rd, if Snap is trading under $64, this expires worthless, okay? Which means we just collect some premium. So remember, the premium that you collect is dependent on what the price of this option is. So for example, here it's telling me the last price for this was $325. So if I sold this call right now, I would receive about $325 in premium for selling this call. And again, in return, if on the expiration date, Snap is under $64 a share, this would expire worthless, meaning nothing would happen. I would still own my 100 shares of Snap, and I would have collected $325. Now, on the other hand, if I sell this call right here at the $64 strike, if on the expiration date, Snap is over $64 a share, you are going to be assigned, meaning that you're going to have to sell your 100 shares of Snap at that strike price, which would be $64 a share. You still keep your $325. That doesn't change, but you do have to sell your shares again at that strike. But that would be okay because if we purchased 100 shares right now, remember, we'd be buying them for about $63.40. And if it goes above 64, we'd have to sell them at 64. So we'd also make some profit off of selling our shares because we're buying at 63.40 and we would sell at 64. So we would make about 60 cents each share, or about an extra $60 plus the premium we receive, which again is $325. So that's how that works. That's how selling covered calls works. So again, let's pretend that we do want to go ahead and sell this call at the $64 strike. Now remember, there's a couple of other different things you need to check. For example, the Greeks. The Greeks is something that's very important. I'll put a link to the Greeks in the description below. But remember, the Greeks involves things like delta, gamma, theta, all those things. Where can you see that? Where can you go to take a look at the Greeks? Well, there's actually this little icon up here on the top left that you can click. This has more available items. And as you can see, this involves the Greeks. So for example, if you want to know what delta and theta is, you can click on those, you click OK. This goes ahead and adds it to all the options. So now if I'm selling this call, I can take a look at what delta is. Delta is 0.51. I can take a look at what theta is. Theta is negative 0.19. So these are very important things to obviously take a note of when you're selling options and when you're buying options in general. So that's how you would go ahead and take a look at the Greeks. But ultimately, let's say we're okay with selling this call here at the $64 strike. What's next? So let's go over to my actual account here, which is right here. So again, I'm on Snap right now. And let's say again, we wanted to sell the $64 strike, which is up here. But remember, we chose the July 23 expiration date. So I'll go back to July 23. And again, we wanted to sell this option right here. So I'd go to the left here and I just click on the last price here. And as you can see, this updated on the right over here. So again, you go to the right over here and it's going to show you that option. And so as you can see, Snap, $64 strike, which is exactly what we just clicked on. It is telling me this is expiring on July 23rd, 2021, which is our expiration date. And this is a call. So that everything looks pretty good there. Now, we don't want to buy a call option. We want to sell a call option. So we'd want to click on sell here. Now, again, you have your different order types. You can go in ahead and do market, stop, limit. Usually, most of the time, you're going to do limit here. So you would do limit. You would do how many contracts you want to sell. So remember, you can only sell one contract for every 100 shares you have. So I could only sell one here. And then I can, adjust the limit price, right? How much do I want to receive for this? If I'm okay with receiving $340, then I can go ahead and leave it there. And then you can say time and force, which if we take a look here, basically tells you what it is by hovering over this icon. So you can change that to day. You can, change it to GTC. I just leave it as day. You would go ahead and place your order. And then eventually, hopefully, that would go through. So that's the steps you would take to sell a covered call. Showed you guys how you would buy 100 shares, how you navigate over to the options of the stock, how you choose your expiration date, how you choose your strike, and how you can take a look at other things, for example, delta, gamma, theta, all the Greeks, things like that. And then finally, how you would capitalize over here by, again, doing sell here. Again, you can modify limit if you want, and then eventually your limit price, and you place your order. But again, always confirm by looking up here where I'm showing you guys on the cursor here that this matches with exactly what you set up over here, right? The strike price is the same, the expiration date is the same, the limit price matches with what we're seeing over here. Make sure that's always correct so that you don't end up selling the incorrect call. So that's how you would sell a covered call on Webull. In my next video, I'm probably going to show you guys how to close out of an option before the expiration date, because I know a lot of you guys are going to ask how you would close out of this. Keep in mind, most of the time, people that are selling options usually just let their option expire. But again, I will make a video on that next time on how to close out of an option before the expiration date on Webull. So anyways, I hope you enjoyed the video. If you have any questions, feel free to leave them in the comments section below. Check out the Discord. Check out the Webull affiliate link in the description below to sign up if you haven't. Hope you enjoyed the video. Let me know what you guys think, and I'll see you guys next time.